Welcome everyone to First Super's 2023 Annual Members Meeting. We're so glad to have you with us this evening. My name is Lisa Marty and I'm an Independent Director on the board of First Super. Tonight we'll hear from our CEO Bill Watson, Co-Chair Michael O'Connor, and we have other members of First Super's executive available to take your questions. I would like to begin by acknowledging the traditional owners of the lands from where we meet today, wherever you're joining us from, and pay our respects to their elders, past and present, and the elders from other communities who may be present with us. These meetings are an essential forum, a place where we can provide you with the opportunity to share your thoughts and ask questions, and we can answer those questions for you and update you on what the fund has achieved over the last 12 months. Tonight, you will hear from Michael O'Connor, Co-Chair of the board, who will present our board's report, our CEO, Bill Watson, who will run through our investment returns and other significant operational matters. And I would also like to acknowledge First Super's board directors and executives who are in attendance tonight, as well as the fund's auditors. I will let you know that this meeting is being recorded for legislative purposes and also for those members who can't be with us tonight. There will be a recording and minutes published on our website. You can submit your questions during the event at any time. Simply click on the Q&A button located at the bottom of your screen. We will try to get to all of your questions tonight. However, if we can't, we will reach out to you directly in the next few days via the email address that you have provided so we can answer your question. Please note, we won't be able to answer questions relating to your personal financial circumstances during the meeting due to regulatory restrictions, and we are unable to answer any member-specific questions during the forum. However, as I said, we can certainly follow up with you via email directly after the meeting. And if you would like to seek some personal financial advice, details about booking a meeting with a First Super financial planner can be found on our website. I do need to also provide you with a general advice warning that this presentation contains advice which has been prepared without taking account of your objectives, financial situation, or needs. You should consider whether the advice is appropriate for you. So please read the product disclosure statement before making any investment decisions. To obtain a copy of the product disclosure statement or target market determination, please contact First Super on 1300 360 988 or visit our website. And as a disclaimer as well, this presentation has been prepared by First Super and may not be used or reproduced without the prior written consent of the trustee. The information in the presentation was accurate at the time of preparation in November 2023. So a bit about First Super and a highlight for you. We are your industry super fund. And that means we are a profit to member superannuation fund. We are not here to make profits for shareholders. Our board and our executive work solely to maximise the benefits you receive. We currently have about 50,000 members and about $4 billion funds under management. $4 billion in funds under management, I should say. And I think we like to think that makes us big enough to perform well for you, but also small enough to care. And we do that through a dedicated member services team with local personalised service. We have a call centre, website, an app, but we also have that dedicated member services team should you like to speak to somebody face-to-face. And of course, you can take us with you for life, contributing during the accumulation phase, contributing funds into the fund, the transition to retirement phase, and also with account-based pension products. And we also now have an app available for download via the App Store, or you can also find a link on our website. I would now like to welcome Michael O'Connor, co-chair of the board, who will provide the board's update. Over to you, Michael.
Thanks, Lisa. So can I thank everybody for attending this meeting, this 2023 annual members meeting. I'd like to acknowledge my fellow directors and trustee staff and our auditor. And I also, unfortunately, have to report that the co-chair, Mike Ratter, can't attend today because he's overseas, and not he's overseas, but he's in a place where he can't even participate in this sort of forum, a Zoom meeting either. So I extend his apologies to the meeting. I want to talk about the fund's performance over the years, and manage your board of directors have also addressed last year, or the last 12 months. And you can ask questions of me, my fellow directors, the fund's auditors, and the fund's executive at the end of the meeting. And to repeat what Lisa said, if there's any issue or things you wish to follow up at all after this meeting, First Super Office will be more than keen to hear from you, either by email or to give them a call. So if something pops up, you don't want to ask a question during the meeting, certainly we encourage you to take the opportunity to ask any questions after the meeting. So the fund had a good year, 2022, 2023. Had a good year because we grew by 3,000 members. And this is the second year in a row that we've had positive membership growth. And of course, you would realise that growth is important, as more members allows the cost of operating the fund to be spread more broadly, and for us to invest in the fund and its service providers. So that's an important thing for all members to know, that we are growing. Off the back of strong investment returns, 9.49% for the ballast option, the fund grew to over $4 billion of funds under management. Again, we demonstrate that being a small fund doesn't mean substandard returns relative to much larger funds. In fact, we outperformed a number of much larger funds for the second year in a row. Over a 10-year period, our accumulation balanced option has returned 7.83% each year, and for pension members, 8.3%. We're able to reduce the cost of death and total and permanent disablement and income protection insurance in May. And pleasingly, 96% of all insurance claims were paid out. This year, member services, or more to the point, the lack of it, has been in the news. What sets First Super apart from other funds is our personal service model. Your board reviewed the fund's member service model in 2022 and confirmed that face-to-face, in-person service will remain a priority for the fund. Our administrator, Superannuation Benefits Administration, is owned by the fund and is dedicated to serving First Super members. We are proud of the high level of service that the contact centre provides. Unlike other funds, our members are able to call during business hours and to speak to someone in less than 3 minutes. Recently, the time it takes to answer the phone is less than 46 seconds. And I urge members maybe to compare that with some of the larger funds going around. There's a stark difference in performance. We have developed member service standards, and we are asking other industry funds to agree to be accountable for delivering those. In 2021, our administrator reduced administration fees for accumulation members. Since then, we've been exploring ways of reducing fees for both accumulation and pension members. But we need to strike the right balance. Our administrator needs enough income to be able to reinvest in servicing you, our members, and be able to recruit and retain quality staff. So there's been some changes in the board, and some board members have retired from the board. Julie George finished as a director in February 2023, and Debbie Smith was appointed as an employed director in April 2023. Frank Varry, a member nominated director, resigned in August 2022 and was replaced by Casey Thompson. Candy Broad, independent director, resigned in October 2022 and was replaced by Lisa Marty. Mick Stevens was appointed associate director in September 2023, and Lisa Rayner, executive manager, governance and company secretary, resigned in June 2023 and was replaced by Hayley Pope. I would like to thank all the outgoing directors for all their service. They've made a great contribution to this fund, and I'm sure the new directors are going to equally work as hard as they can for you, the members of this fund. So the next report coming up is from our executive CEO, our CEO, Chief Executive Officer, Bill Watson. So I'll hand it over to Bill. Thanks, Bill.
Thanks, Michael. And thanks, members, for coming along this evening. I can see from the attendance list, there's a few familiar names, and unfortunately we can't see in person familiar faces. So some of the long-term members, thanks very much for coming along this evening and investing your retirement savings with us. And thanks to former employees for joining us again this evening as well. It's nice to see some of you as well. I wanted to cover off this evening our team, talk a little bit about investment returns, what the fund got up to in the last 12 months, and the things that are keeping us awake at night. Michael's already touched on one of the key ones, which is service to members, but I'll touch on that a bit further later on. So in terms of our team, we welcomed Hayley Pope as Executive Manager Governance this year, replacing Lisa Rayner, who left us on the 30th of June. Joining me in the team is Michelle Boucher, Andrew Jewell and Laurie Kennedy. And Laurie clocked up his 10-year anniversary with the fund as well, as the backstop to the fund as our risk manager. So thanks for changing the slide. So if we move on to the next slide, thank you. We've got the returns there for the last couple of years. The key thing to note, as Michael mentioned, is the really good long-term returns that we've our members have enjoyed, and particularly over the last couple of years where we've managed to outperform a number of larger funds, which then has the effect of adding to the longer-term returns. Our balanced pension option last year returned 10.14%, and over 3 years was nearly 9%, and that's all compounding that goes directly into members' accounts and members' earnings. On the other hand, cash returns weren't as good as they had been in previous years, and that was a function of the very low official interest rates. But we've certainly seen a substantial uptick in cash returns for both pension and accumulation members in the last 12 months. And on the super ratings measurement tables, we're either leading or second or third in cash over various periods of time. So it's good that we've been able to pick up the performance when we need it to put it into member accounts. The things that drove our performance last year was allocations to private equity, property, fixed interest and floating rate debt. And in some cases, the contribution they made to performance was because we had less than what our allocation target was. And one of those examples was property in last financial year. We were fortunate to redeem out of the QIC Property Trust, which meant that we were underweight property for 5 months, and in effect lost less in that class than other funds that were fully weighted. On the positive side, in Australian shares, 3 of our managers had really good years last financial year: Ausbil and Alan Gray and Eli Griffiths in small caps. And they added 23.2% against the benchmark of 21.4%. International infrastructure through the IFM Global Infrastructure Fund also made a significant difference, a 14% return against the benchmark of 8.39%. The other area of investment that the board and the investment committee was very active last year was in relation to appointment of international equity managers. The board formed the view that one of the managers that we had, a long-term manager, had to go because of substantial underperformance, and the fees that we were paying couldn't be justified relative to the performance. So the decision was made to appoint 2 managers in the place of that manager. So Skerry Vore was appointed to manage emerging markets, which is the first time that we've dipped our toe in that water. And the board has been very cautious on that exposure, and Metropolis, which was developed markets. The other thing that we went live on during last financial year was an allocation to IFM to manage an index international share strategy that had a bias towards ESG and in particular labour rights. And we did a fair bit of work back testing on that area, that is going back in historic periods to see whether that would add value for members, and based on historic results has. So we've had a bit of a change in international equity managers in the last 12 months. Turning to other activities in the fund, we've built out our marketing and communications, particularly our digital capability and capacity. And what that has meant is that we're finding different ways, and hopefully better ways and more useful ways, of connecting with members. So the website has been a particular focus. Member statements. We've continued with our First Talk online videos, providing information for members, but particularly retirees, on topics of relevance to having a dignified retirement, and retirement webinars. The other thing that we're pleased to launch in this financial year, but the team had been working on quite a lot during last financial year, was an app. And we know that a lot of our members have already downloaded it. And one of our directors indicated that last week that she now gets messages on her Apple Watch telling her when her boss has deposited her super in her account. So that's particularly important in terms of staying relevant for everybody. So as Michael touched upon in terms of the areas of fund activities, the board spent a lot of time last year thinking about service. And one of the reasons for that is we've been under pressure from the regulator about our operating cost model. And they've said to us that we are an outlier, we're different from every other fund, because we have invested a lot of resources in in-person service. So it was an opportunity for the board to have a look at that. Now, all of the research that we did during the period of time indicated that people who have got access to financial advice end up with better retirement outcomes. Now, that might seem like a self-evident observation, but what we needed to do was go through a vigorous and thorough process to be able to identify that. Superannuation is incredibly complex, we know that, and we make it hard, I think, the industry generally to get across to members simple concepts. So having field staff with the member and employer services coordinators, our financial planning team, out there talking to members like you was really important. We also looked at the contact centre, and we're particularly proud of the work that they do, that we know that members and employers when they ring can get through pretty easily. And that's by contrast to what other funds are doing. So I'd like to thank all of our contact centre staff for the work that they do. I'd also like to thank our financial advice team and the member and employer services coordinators for being out there every day of the working week, looking after members and their families. One of the significant things that we did during the financial year, as we built out the capacity of the trustee office team, and in particular recruiting Michelle Boucher as the Deputy CEO some 2 years ago, was insourcing member and employer services in April. 2023. And there's a question from a member on that later on, and I'll go to the ins and the outs of it at that stage. We would like to welcome on board the coordinators and more particularly thank the manufacturing division for providing this service since the fund was created in July 2008. It's been a really important part of the way that the fund goes about servicing members and maintaining links and relevance to all of our industry stakeholders, because we want to stay close to all of them. So in terms of the numbers, during the year, nearly 19,000 employers contributed to the fund. We've got 250 employers who represent nearly 80% of the contributions, but we are spread the length and breadth of the nation when it comes to members working and employers contributing. Members nearly received $190 million in superannuation guarantee contributions, but more pleasingly, there was $168 million in member contributions over and above the SG. A reasonable proportion of that was from our members, our KiwiSaver members, that is New Zealanders who have permanently emigrated to Australia and who have consolidated their New Zealand super into Australia. And they've been a significant contributor to fund growth over the last couple of years and also membership growth. So I'd really like to thank our KiwiSaver members for being a part of First Super, and hopefully we're providing you with the level of service that you expect. But the fund isn't just about accumulating money, it's all about paying benefits to members. And it's pleasing that we paid nearly $70 million in the year to members in retirement benefits, whether it was pensions, transition to retirement, or cashing out some or all of the super. That's the good fun part of our job, which is paying people their hard-earned retirement savings. So I've talked about our contact centre. There's nearly 32,000 calls during the year to our member services team who are based in Carlton, Melbourne, Victoria. And on average, members only had to wait about 49 seconds. And that's a matter of personal pride for me, that people can get through and talk to a human being quite quickly. A part of the delay in getting through is having to listen to all of the warnings that we've got to give you about it being recorded, etc. There were a significant number of outbound calls made, nearly 20,000 emails, and Go Australia Post responding 13,000 letters. So as a stamp collector, I'm rather pleased to see we're still sticking to old-fashioned letters in the mail, which is terrific. We've got a financial planning team comprised of 4 people. And we've built out that team progressively over the last number of years. They're led by Andrew Jewell, and Andy's been with us for nearly 10 years too. And we've got Jason, Daniela and Richard. One of the pleasing things about the financial planning team is we engaged Richard Gosling to work out of Mount Gambier. So our members in the Greater Green Triangle have got access to a person who lives and breathes and is a part of their community. Significant areas of work for the financial planning team is conducting retirement health checks, and that's dealing with the typical member question about, will I have enough? What have I got to do when I'm in retirement? Advice was provided to 143 members, and some of that personal advice is both to members and their families. We help members in a legitimate way, not in a Kerry Packer kind of way, save over $1 million in tax, and that's through salary sacrifice arrangements. So you can do things that are within the law that help benefit you. One of the key things for members when it comes to advice getting ready to retirement is the age pension and maximising age pension entitlements. And I can't stress enough what a big benefit that is for members in receiving that advice. And then on a much smaller level, but as we know from little things, big things grow, super balances were increased by over $12,000 for members generally through super contributions. And this is if you earn under a certain amount of money and make a contribution, the government will also make a contribution towards it. So it's a worthwhile strategy for those people who can afford it. And if we've got any parents or grandparents viewing in of an evening, if you've got children and grandchildren who are earning low amounts of money, you can also kick some money into their accounts and help them get the low income superannuation contribution. That makes a big difference when they get ready to retire. And given the intergenerational inequalities, for younger people now, every dollar in their super account is going to be really important to them when they retire. One of the big things for the fund is investing properly. We don't believe in maximising returns at the expense of investing for the short term. We invest for the long run, and we believe that if you apply environment, social and governance factors, that will maximise returns and minimise investment risk. We've done that through our private equity program, where we invest in Australian companies and we run them through a very vigorous and extensive due diligence process to identify the risks that we have if we invest in them. What that means is occasionally we won't invest in those companies, and other companies we identify issues. And a condition of investing is we want to see those issues fixed. Our engagement with managers particularly focuses on how they apply ESG, and that's always leads to a very spirited discussion at the investment committee when they review manager performance. As I mentioned earlier on, we awarded a mandate to IFM to invest in the international share market, but what we wanted was an ESG screen, which they've done, and we're rather proud of the work that we've done that. We're the first IFM client that's done that, and IFM's a global fund manager. So that says a little fund like us can do significant things.
Thanks very much, Bill. We now have time to answer the questions that you have sent to us in the lead up to this meeting this evening, and also any questions that have been sent through today or that you can still send through at any time during the meeting. So please feel free to add questions through the Q&A button at the bottom of the screen. So we will kick off now with some of the questions that have been sent through this week. The first question we have is, why is the pension phase performing worse than the accumulation phase? I think this is referring to a recent quarter, not the 2022-23 results that Bill was talking to in the presentation. And I might ask Andrew Jewell, our Executive Manager for Financial Advice and Education. Andrew, are you able to answer that question for us?
Sure, Lisa. In short, it's all to do with tax and what is deemed to be a capital gain or a loss. An example is shares in the ASX, the Australian share market. Given the market volatility, and especially after the past 2 months, some shares have been sold at a loss and some have been sold for a gain, and other shares that are traded on stock exchanges, which we hold, are revalued daily. So any losses are recorded immediately. Any loss can be used to offset any gains, thereby reducing capital gains tax payable. And this is beneficial where tax is payable, like the 15% tax on earnings for super funds sitting in the accumulation phase. But a pension account pays no tax on its earnings. Therefore, there is no tax benefit when offsetting a loss against a gain. So we have this paradox where a falling share market means the earnings on the accumulation funds can be higher than the earnings on a pension funds, simply because earnings are taxed on accumulation funds, and we can use capital loss to offset any capital gain to minimise that tax. There was also a variable tax adjustment in July, which regarded an over-provision of tax accruals.
Thanks very much, Andrew. The next question we have is, how ethically is First Super investing my superannuation? Bill, could you answer that question for us, please?
Would be my pleasure, Lisa. And one of the things to note is we'll have the answers to all of the questions up on the website afterwards. I'll be referring in my answer and a couple of others that I've got, where there'll be links to the website which will take you to the exact area that members have asked for. So our approach to ethical investing is by applying environment, social and governance factors, often known as ESG, to our investment process. How we do this is described in our investment governance statement, and you can find our approach to ESG on the fund's website. And I've provided a link there, but it's basically the ESG and voting policy, and that sets out in great detail. And if you've read it and you've got questions about it, I'm more than happy for you to get in touch with me via the contact centre, and we're always happy to talk about that. We apply, as I've mentioned previously, we apply ESG factors to manage investment risk, because what we want to do is protect members' money against downside risk. And members would have seen in the last number of years where we've had the wage theft debacle that's occurred in a number like 7-Eleven. The whole point about trying to manage ESG risk is to manage those risks that can occur. We believe, based on research, that companies with sound ESG risk management outperform companies that don't give ESG a priority, and that's over the medium to longer term. We've got information on our approach to investing generally on the website under the Responsible Investing tab. The way we put this into practice is, firstly, in selecting managers to manage members' retirement savings, we assess those managers' approach to implementing ESG and their track record. Our investment strategy advisor, Frontier Advisors, assesses potential managers' approach to ESG using their evaluation framework, and they've got a 5-star rating system. And our board and investment committee, when appointing managers, takes into account Frontier's assessment. Potential managers are interviewed by the investment committee and tested on their ESG processes. So the process that we went through last year to appoint 2 international equity managers started nearly 3 years ago, where we went through a number of rounds of managers, and none of whom had satisfactory processes. So we'd much rather take our time to get things right. Once appointed, managers are regularly reviewed with attention paid to Frontier's assessment of their ESG practices. And during annual manager reviews, the investment committee also focuses on those practices. In the past, we've engaged with our managers who we believe their approach to ESG is not adequate. And in some cases, that's led to, at least one case, it's led to their termination. As I've mentioned, in the private equity asset class, we've got an extensive process to identify risk as an input into deciding whether to proceed with investments. And finally, we're members of the Australian Council of Superannuation Investors, which engages with companies, financial markets and governance to positively influence and lift ESG performance. We use Axis advice as an input to inform how we vote at company meetings. However, we don't usually support remuneration report where the CEO increases above the relevant increase in Australian weekly ordinary time earnings. Now, we report on how we vote at all of those meetings on our website, and if you put in proxy voting, you'll find that there as well. So we do provide transparency for members, but as I've said, more than happy to talk about the granular detail. Thanks, Lisa.
Thanks very much, Bill. The next question we have is, how often should I review my super? Andrew, could you answer that one for us, please?
Of course. This really depends on what's happening in your financial situation. Now, as it's been mentioned, super is a long-term investment. So if you decided on which investment best suits your risk tolerance and return expectations, then let it run its course through the peaks and troughs. It's always best to review as you get closer to retirement or just before you do retire. Remember, you will receive an annual statement, which includes how your investment choice has performed, and an update halfway during the financial year. And you can always check your account online or our website for the latest monthly performance results. The best time to review your super is when a significant milestone or event happens. This is the time to check whether you should be making any changes to your super to meet the changes in your personal and your financial situation. As mentioned, we do offer a retirement health check on your super, which is a service that provides a projection as to whether your super is on track to provide the required income you and your partner, if applicable, need in retirement. It will consider any eligibility for the age pension, This is available to our members while they're working or even if they're retired. We suggest a retirement health check is undertaken every 3 to 5 years, and without doubt, when there's a significant change in your personal, your financial situation. And yes, it's always good to randomly check throughout the year to ensure the contributions are being received.
Thanks very much, Andrew. I actually have another one for you next, and it's a general question. It simply says, will I save money? So perhaps relating to capital preservation and net returns. But perhaps you can take that on and give us some broad answers to that one, please.
Sure, yeah, it's a very broad question. And I'll try my best to answer that question and what I think is being asked. I mean, super is about money being put aside for when you retire. You can't access those savings until you do, which is usually when someone is 60 years old or older. You must meet something called a condition of release before you can receive your monies. But before then, super receives favourable tax treatment on how contributions and earnings are taxed. And when the member does retire, they can withdraw their super tax-free, and the earnings may not be taxed. So super will save you money when compared to alternative options, especially where tax is concerned.
Thanks very much, Andrew. And I have one more for you next, and that is, am I allowed to borrow money from my super if I need to?
No. There are special rules how super can be accessed, funds withdrawn. And one of the rules is that a person and the super fund cannot borrow money from the accumulated balance. When I mention accessing super funds, this depends on the member's preservation age and something called a condition of release, as I mentioned before. But there's also special consideration of their personal and financial circumstances needs to be made. What I suggest, to find out more about these access options, you can visit our webpage, Accessing Your Super Early.
Thanks very much, Andrew. The next question we have is, can you explain how employing 11 CFMMEU personnel at $2.4 million for coordinator services is in members' best financial interests? Bill, are you able to answer that one for us, please?
It would be my pleasure, Lisa, and thank you, member, for the question. Firstly, I'd say at the outset, the arrangement with the manufacturing division of the CFMMEU ceased on the 31st of March 2023. So we're now talking about a previous historical practice. That ceased when we took over employment of the member and employer services coordinators. The decision to end the arrangement with the manufacturing division was the culmination of a process to create the capability and capacity within the trustee office to directly manage this important member and employer service. So the view was that it was then an important member service and it remains an important service. It's just who was providing it. First Super's member service model is to provide members and employers with a high-touch personal service. The reason for this is that superannuation is complex, with the majority of our members requiring assistance to get the best out of their super. If I look back to when the fund was created, it was to give members a dignified retirement. Research tells us that with access to financial advice and assistance, members do better saving for and in retirement than others. And our member service model is all about giving every member of the fund every opportunity to attain and maintain a dignified retirement. Our coordinators go out to where members work and live, providing them with face-to-face service. So we've got coordinators in Adelaide, Mount Gambier, servicing the Greater Green Triangle, Melbourne, Tumut, serving all of the timber industry in and around there, and regional New South Wales, Sydney and Northern New South Wales, which are also services into southeast Queensland and as far above Brisbane to Gympie and occasionally further up the Queensland coast. We've got our regional coordinators primarily based in timber communities because that's the heart of the fund. We believe our member service model and the coordinators are the key to delivering a model which is in members' best financial interests and previously was in members' best interests. In relation to the former commercial arrangement with the manufacturing division, the contract for these services was subject to a competitive tender around 2017 that was overseen by a probity auditor. Final arrangements were subject to an independent value for money assessment conducted by an accounting firm, Crowe Horwath. We've made no secret about this arrangement. We've continuously disclosed monies paid to the manufacturing division in our annual reports and notes to audited accounts, and also on the website. Monies paid to the manufacturing division for the coordinators included wages, cars, travel, digital, office accommodation and office support. So a significant number of people, as identified in the question, 11 people employed at a cost in the previous financial year of $2.4 million. Thanks, Lisa.
Sorry, thanks very much, Bill. Our next question is, why has the conservative balanced portfolio not performed as well as the balanced portfolio? Could you answer that one as well, please, Bill?
I will, Lisa, and thank you for the question. The first thing I'd say, in a market of positive returns, if the conservative balanced portfolio performed better than balanced, I'd be a bit worried. And the reason for that is that in the balanced option, 66% of it's invested in growth assets. So in rising markets, it will outperform the conservative balanced option, which only has 40% invested in growth assets. So all other things being equal, the balanced option should outperform the conservative balanced option. In times of losses, we'd expect to see the reverse. The balanced option has a larger exposure to assets that benefit from rising investment markets: real property, that's office and warehouse, shares, infrastructure, things like airports, toll roads, ports, poles and wires, and private equity. On the other hand, in falling markets, conservative balance should lose less. So if I take 1 month as an example, and I've got to say, past performance is no indication of future performance, but I'm just using 1 month as an example. In September 2023, the conservative balance lost in a poor month 0.87, whereas balance lost 1.46%. So that's how we think things should work. But the key thing about this question, and teasing it out a little bit more, if there's an expectation from the member about better returns, is that our contact centre, our coordinators, more to the point, Andy and his team, can provide different types of advice depending on your personal circumstances to make sure that the investment option that you're invested in or want to invest in is right for you. Advice to you as a member of the fund on investment options that the fund offers is at no direct cost. So I do encourage you to pick up the phone, get onto the contact centre and put Andy and his team to work to give you advice on the right investment option.
Thanks very much, Bill. The next question we have is a topic, I would say. It says fees and insurance cover. But I think, Andy, perhaps can you talk to us a bit about fees and insurance cover, please?
Sure. Like you say, there's another broad question, and I'll try and answer it in the best possible way. But like many super funds, we offer death and we offer total and permanent disability, or what's known as TPD insurance, as part of the super account offering. This is called default insurance. A member can apply to change the level of cover if they want more or less, depending on their needs. And a member also has the option to apply for income protection. Our default insurance has been designed so that the premium does not increase each year with age, like most insurance offered outside of super, but in fact remains fixed. This means the same premium is paid by all our members regardless of their age. What does change is the amount of cover, the sum insured. This reduces as the member gets older. The reason being, it was designed to represent loss of future income in the event of death or TPD. So there is a higher sum insured for our younger members and a much lower sum insured for our older members, remembering that our older members will most likely have made many more contributions and as a result have a much larger superannuation balance than our younger members, simply by having worked for a longer period of time. Since the majority of our members perform manual labour, the insurance provider, MetLife, like all other insurance companies, deem manual labour as being a high-risk occupation and therefore sets the premium accordingly. However, we have members that do not perform manual tasks, and these members can apply for a lower premium rate. You should refer to our publication Insurance Guide for more information on this option.
Thanks very much, Andy. The next question we have through is, why can't super funds be more transparent with knowledge about exactly where super money is invested? Bill, are you able to answer that one for us?
Thanks, Lisa. So at the outset, I would like to apologise to the member that asked that question, because we like to think that we do make it easy to find, but having reviewed our website, I'd have to say we actually make it a little bit more difficult than it should be to find out where your super's invested. So one of the actions from the annual members meeting is we're going to make it easier to get directly to it. We do actually disclose on our website where your super is invested. So on the How We Invest Your Super page, oh, it's gone blank. Oh, no. How We Invest Your Super page, if you scroll down the page and click on the investment option that you're investing in, it expands out to a list which details the managers that we've appointed to manage the money in each of the asset classes. And then we provide in greater details on individual securities, so shares, credit instruments and the like, that we hold as investments through some of those managers, which is available by clicking on the Portfolio Holdings disclosure link at the bottom of the list. So it's there, but you've got to, the way we've set it up, it could be a lot easier to access. So we will be actioning that to make it easier, that where you go to the investing website, you click on a button, it will take it to you. It's all there, but we want to make it easy to find. So I'm sorry that you had to answer that question, but I'm glad you did, because it's caused us to do something.
Thanks very much, Bill. The next question we have through is, how can someone claim a co-contribution from government? Andy, are you able to answer that one for us, please?
Sure. You do this by noting the additional, or what we call the voluntary contribution you made during the financial year when you're completing your tax return. The ATO would determine whether you're eligible and how much super co-contribution you're entitled to when they are assessing your tax return. It's based on your assessable income and the total voluntary contribution that you made. The super co-contribution is usually sent to the super funds and credited to the member's account in November each year.
Thanks very much. And the next one I think is for you as well. Projected balance at retirement you supplied. How much could I get each week from the government? What is borderline for super? So I think maybe the interaction with the age pension there.
Yes. Yeah. So I mean, as the question proposes, I mean, we do provide projections, and there are those that are issued by the Financial Advice Team, as we mentioned previously, the Retirement Health Check. And otherwise, we have links to calculators on our website for those that prefer to do it themselves. And both options include an indication as to whether the age pension will be a source of income in your retirement years. We also provide a projected retirement income on our annual statements, but this does not include the age pension. So in answer to the question, the age pension is determined by Centrelink underneath the asset and the income test. And without going into too much detail, as it would take too long, Centrelink will consider all financial assets, which includes super. Also non-financial assets, such as cars, house contents, boats, caravans, and if the person is a homeowner or not, and whether they are a single or a couple. So as you can see, there are many factors which determines how much age pension someone is entitled to. We do have short videos called First Talk on our website, which explains the assets and the income tests. Alternatively, you may prefer to talk to one of our financial planners who can give advice on how much and ways to maximise your eligibility for the age pension where applicable. Or you can contact Centrelink's Financial Information Services Officer, who can answer questions about the age pension eligibility and how much as well.
Thanks very much. And the next question we have through is, what is the 2024 outlook for First Super in terms of performance? I think, Bill, are you best placed to answer that one for us, please?
Yeah, and I'd like to thank the member for asking me a really tough question. is it's a bit difficult to predict investment performance. At this point in time, it's difficult to have a clear view on the outlook. But what we do know is that share markets have really struggled this year, as have other assets. And so there's been a lot of volatility with markets rising and markets falling. It's quite different from the previous financial year, where in the previous financial year we saw growth stocks take off in the first half, tech stocks had been oversold, and in the second half, tech stocks recovered to provide a rather pleasing result. And as I mentioned earlier on, Australian shares returning over 20-odd%, a good result. What we know now is that inflation's persisting, and you don't need to be reminded about that after the Melbourne Cup Day Reserve Bank increase in interest rates and stuff coming out of the United States. But with inflation persisting, there's a risk of further interest rate increases, which, if they have the intended effect, and they've got to at some stage, which is slowing economic growth and therefore slowing inflation. What we've seen is remarkably resilient economies, but in particular in the US and Australia, which unfortunately could lead to further interest rate increases. What we think the outlook generally is for investment markets returns and therefore investment option performance, with the exception of cash, is muted share market performance. What we're also seeing is a devaluation of property assets, and property funds fall in response to increases in interest rates and post-COVID demand for office space. But on the other hand, and we've got to be positive, the outlook for credit and cash is strong, which will partially offset performance in the share market. So, for example, we're getting over 5% in term deposits at the moment, which relative to other asset class looks good. But the one thing I remind myself as we encounter further volatility is that as a fund, we invest for the long run. Our super is a long-term investment. I've been with the fund for 10 years now, and what I've seen in that period of time is plenty of ups and downs and ups again, but also a strong, sustained long-term performance. Our balanced options return 7.83%. This is accumulation for each year for the last 10 years, and Shares Plus over 10%. And in Shares Plus, there has been quite a bit more volatility, that is losses and lower returns relative to the balanced option. So I can't predict the future, but I do know that over the long term, we've done okay building members' retirement savings accounts, and we'll continue to work towards that. The investment committee is well on top of trying to manage investment risk, as is the board, and will continue to do so. Investment performance and manager performance is a topic that generates a lot of discussion at the investment committee. Thanks, Lisa.
Thanks very much, Bill. Those questions were all sent through in the lead up to this evening, and it was great to have such fantastic engagement in the lead up and really great questions coming through. We've also got some questions that have come through during the event. The first one that's come through is, there was a comment from Michael O'Connor about the positive growth in member numbers to now being more than 50,000 members. How big would the fund like to be? Bill, can I throw that one?
Sure, Lisa. Thanks for the question. One of the things that we're trying to do with membership growth for the fund is put it on a sustainable basis, such that we can manage the cost of running the fund, which increases every year, but provide good quality service to members, which is absolutely key, and at the same time generating the good long-term strong investment returns that we're doing and exceeding the investment return targets that we have for each of the investment options. So that's why we've been working hard at it. What the exact number is, I can't actually say, but I do find that if the fund was to grow to, say, a couple of 100,000 members, it would be a very different fund from what it is today. One of the things that we pride ourselves on in the fund is the links to our shareholders and stakeholders and to the communities and industries that have supported us. So staying focused on looking after member needs in those areas, and also our KiwiSaver members is particularly important. So we'll continue to grow the fund, but it's not going to be growth for growth's sake. It's growth to ensure that members get good quality retirement outcomes, and members both working and in retirement and their families are able to be looked after. We want to maintain our member service model, maintain the contact centre. So more members is good, but not hundreds of thousands of members.
Thanks very much for that, Bill. I think the next question is for you as well.
Yeah, sure.
It's, can you share the developments, i.e. website, member services, app, etc., that First Super has in the pipeline for 2024, and what members can anticipate to see over that year?
So thanks, Lisa. So there's a couple of things, and thanks, Ben, for the question. So what we will continue to do is develop our digital capability, and that will be through enhancements through the app. So we've got a starting point with the app that we've launched. Inside First Super Online, we'll be looking to enhance that further and provide additional features. We're relying upon our service provider, Iris, through the Acurity platform in terms of their development pipeline to be able to provide a broader range of services. We're actively reviewing the planning and online calculation tools, but we've got to navigate through regulatory compliance on that. Making the website easier to access information and the layout, and I've already talked about that in terms of making information easier to find, will be and remains a priority. One of the other things that we're looking at doing is working with our administrator, SBA, to improve the timeliness and the quality of administration services. So we've described it as admin transformation. And what we want to do is make our administrator the best administrator in Australia. And we don't want to set our standards by reference to the low levels of service that members are experiencing at other funds. So there's a significant amount of work that will be done behind the scenes to uplift our administration capacity that might not be as visible, but is all about making sure that we're processing applications, we're responding to member requests quickly and promptly, and providing quality advice. So it's a range of things. As I've said, we've launched the app, we've got to bed it down, we've got to expand out the services, but we've got a constant eye on what other funds are doing. We don't see ourselves as a pioneer in that area, but we do see ourselves as spending members' money wisely to provide a good quality digital offering.
Thank you very much, Bill. The next one we have in, it's not a question, but a comment. Thanks, Penny. It says, thanks for the retirement health check. I finish up in 4 weeks and I'm looking forward to life after work. Thanks to Jason for great advice over the 5 years I've been a member. It's really great to hear, Penny. That's exactly the service that we hope to provide, and fantastic. Thank you so much for feeding that through.
Yeah, and if I could just add, Penny, Jason's become a dad again on the weekend, so we'll pass that on.
Thanks, Bill. And I think the next two are designed to be read together. This one says, this is a pet peeve of mine. I see a lot of other super funds sponsoring AFL teams and incessantly advertising on the TV or radio. How does this help their members? I should have added, if it does, why aren't we? Can I throw back to you, Bill, for that one?
Okay. So there's a couple of things. We don't necessarily believe that broad-scale advertising and broad-scale sponsorship leads to member attraction, recruitment and retention. And that's why that's the rationale that other funds do. But I'll leave it to other funds to talk their own book in terms of their marketing and retention strategies. What we do as a fund is, on a fairly miserly basis, spend money on community sponsorships, whether it's supporting community sporting competitions, not individual sides, supporting community events like the Tumut Festival of the Falling Leaf, the Glenray Timber Festival, where that's bringing together timber communities and the like, so back to our core industries and other areas. We've recently, for the first time, spent money on television advertising, both in the Mount Gambier and the Latrobe Valley area, as a part of our regional campaign. And that's all about extending the reach of the fund into communities where we've already got a significant amount of membership. The amount of money that we're spending on that is quite modest and is disclosed on the website and will be disclosed in greater detail next year. So that's been not just the broad scale advertising that you see when you turn on the telly, but it's about specifically targeting people who live and work in the communities where our members live and work, and more than likely are their family members, because we believe we can provide them with the same level of a good quality super fund as their family members are. They'll be better off in the long run. I think that's answered the question. So sporting sponsorship, the AFL and all of that stuff we don't do. We don't sponsor the umpires. We don't sponsor the football that's kicked around, the pigskin. It's very specific in the way that we do it. We're always pleased to sponsor community events where we know that we've got members. So this year I had the pleasure of going to the Glenray Timber Festival and running into a ton of our members, and also going to the Tumut Festival of the Falling Leaf and participating in their parade in my vintage car. So all of that was all about getting out into the community.
Thanks very much, Bill. I hope we've answered everybody's questions. Thank you so much to everybody who sent through questions ahead of the meeting tonight and also during the meeting. As we mentioned, if anything does hit you tomorrow on reflection and you have a question, or if there's anything that relates to your personal circumstances, please don't hesitate to get in touch with us. And we'd be only too happy to help you with those questions. I might now hand back to you, Bill, to close up and finish the meeting. Thank you very much.
Thanks, Lisa. So thanks, members. Thanks, ex-staff member and other people, and James for making yourself available. That was the other thing. If anybody had any, before we close down, any questions for the auditor again, James is there to answer it. And if you've got any questions about the fund, rather than stuff about investments or financial advice, we are available. You ring the contact centre, we will give you a call back, and we're happy to talk about anything that concerns you or suggestions that you've got in relation to the fund. So I'd like to thank you all attending. I'd like to thank the directors. And above all, it's an absolute honour and privilege to be looking after your families and your retirement savings. We do take it really seriously because we know our job at First Super is to create happy retirements. So thanks very much, everybody.